Alright, good morning everybody. Happy Monday. Today is March 6th. SPY is up just a tad from Friday's close, currently trading at 405.18. And we ended up closing on Friday, obviously a lot higher, at 404.19, where we started the day at 399. So this was a gap up from Thursday to Friday. And if we look at the 1 year chart, these are the price levels that I've got for SPY. 401.44, currently right below us, 399.03, 396.31, and then 408.46, and on top at 417.23. There's another one at around 418, which is the Fibonacci level going from the bottom of COVID to the top of the bull market. So do keep that one in mind, but we don't have it on the chart right now. The expected range for SPY this week is between 396.50 and looks like 411.50. So probably not going to move more than $7 in either direction. And the big event for this week is going to be Powell speaking tomorrow and on Wednesday testifying in front of Congress. Not really sure how much is going to come out of that, just considering that it is, testifying in front of Congress. It's not a FOMC meeting. So we'll have to see on that. And then the other big reports are going to be in the labor market. So if we look at the economic calendar for this week, we're looking at the JOLTS job openings coming out, I believe, on Wednesday morning at 10 a.m. That's one of the biggest reports. And then you have ADP non-farm employment change at 8:15 on Wednesday. So jobs data coming out Wednesday. It's been coming out a lot hotter than expectations. So the labor market is considered to be extremely hot. Whenever the labor market is extremely hot, that is inflationary, which is bad for the stock market because rates have to continue to go higher. And if we're looking at the odds for 50 basis points versus 25 basis points for the March meeting on March 22nd, if we go to FOMC countdown, this currently stands at a 30% chance of 50 basis points and a 70% chance, well, if it'll load for me, 30% chance of 50 basis points, 69.4% chance of 25. So SPY is currently starting the day at 405. I think I'm bullish to neutral given the fundamentals. So the 10-year is down by 1% from 3.96 to currently 3.93. If you're looking at the dollar index, this one's also down. So algorithmically, SPY should go up whenever the dollar goes down, and then the reverse, whenever the dollar goes up, SPY should go down. Whenever the dollar goes up, SPY should go up. Go down, whenever the dollar goes down, SPY goes up. So currently, dollar is at 104.44, basically at the pre-market lows and below where we closed on Friday at around 104.50. If we do end up regaining that 104.50, I could see the SPY possibly turning around. So we'll watch this. Right here, the close was around 104.50 again. That'll be the mark that we watch out for. And then pretty close above that, you have the 200 moving average, and this is looking at the 5-minute chart. Let me adjust this to actually be 104.5. Great. Oh, my camera might be blurry. Look like I haven't slept in a week. Yeah, that's the perks of having a child and sleeping 3 hours at a time. And also in the midst of moving. All fun stuff to be doing at the same time. But yeah, SPY currently trading at 404.85. I did open a call credit spread last Friday. So I want to check in on that, see how that's doing. SPY is still slightly in the green, up positive 0.15. And then the call credit spread is currently down by $45 this morning. Thinking about opening a bullish neutral trade, so put credit spread. That expires for today. But want to continue to monitor the dollar just in case that goes above the 104.50 mark. That would be my main concern for the bullish argument today. But let's see, we do have some supports from Friday at around 402, 403-ish. Let's see, $3 down. Probably pay pretty decent since it's early in the morning. So let's see how much we can get from that. And that'll turn our call credit spread into an iron condor too. I might even extend the expiration date to tomorrow when Fed Chair Powell is going to be speaking at 10 a.m. Markets might go up with Fed Chair Powell, given that it's not really supposed to be a big event. You're only getting 12 cents for a 403 put credit spread expiring today. So yeah, that's not worth it for $2.50 lower than where we're trading right now. That doesn't make a lot of sense at all. But if you extend the expiration date to tomorrow, March 7th, you'll get paid about 30 cents. And then if you go one strike price lower, assuming that we're going to be above 402, you're getting paid 23 cents. That one I think I'd be willing to take on, assuming that we're going to be above 402 tomorrow. Currently we're trading almost at 406. So that'd be about a 1% down. Okay. We might be able to wait for it. Let's keep watching the dollar. See if the dollar ends up recovering. Looks like it's at 104.44, so we didn't get to that 104.50 mark. Got pretty close to it, but not quite. And then the 10-year is still down at 3.93 versus 3.96 close yesterday. The only fundamental that would stand out to me being bearish would be the VIX, currently up by 1.6%, but it is basically trading in yesterday's or Friday's range, I should say. So not really much change overall. But if I can get like 25 cents credit out of this put credit spread, assuming over 402 tomorrow, I think I would take that. Right now it's paying 24, which is not too much different. The bid just dropped to 23. Okay. Probably just gonna risk the standard like 300 for the trade. Yeah. And the bid moved down to 23 now. God dang it. Gotta love the bid-ask spreads on Robinhood. All right. I got in at 23. So let me post that to the premium Discord. No, can't type. This will be a swing trade since it expires tomorrow. Just opened a new SPY put credit spread expiring tomorrow. Tomorrow is the 7th at 23 each. And I'm assuming it's going to be above 402. And again, main reason that I opened this was Fed Chair Powell is scheduled to speak tomorrow, and I think that it's mostly going to be a non-event. It's a testifying in front of Congress. Again, this isn't like a FOMC meeting. It's just more so kind of explaining why he's been raising interest rates. Maybe he'll give some forward guidance, but I think that's pretty unlikely. I don't know if he'll comment on 25 basis points or 50 basis points, but I think he would, even if he does, I think he would be leaning to the 25 basis point camp. Based on, recent speeches of his, that seems like a likely outcome. But yeah, so the dollar not really moving much this morning. The 10-year is actually making its way back up. 3.96 at close to now 3.94. So if that does end up making its way back up to the high 3.9s, 3.96, 3.98, maybe even as high as 4 somehow, that would be bearish for the market. But seems like the markets care more about what the dollar is doing compared to what the 10-year is doing. Sometimes the 10-year will just go unnoticed for periods of time. But IWM is shockingly down today, negative 0.22. It did close pretty high relative to the other indices, but topped out at 192.14, almost at that 192.16 price level that I had coming from the 1-year chart. Let's see. This big red candle right here is where that came from. Currently 54 RSI for the daily chart and a long way from its 200 moving average. So SPY, part of the reason why it ended up bouncing on Thursday of last week was the 200 moving average line. It dipped slightly below it in the morning, and then after Fed Bostic spoke at around 1:30, calling for 25 basis points at the next meeting, that's when the markets really started to rally a shit ton. And then it continued that on Friday. All right. So I do think that there could be a decent pullback, considering that the odds for 50 basis points versus 25 basis points didn't really change much. Again, if we go to the FOMC watch tool, this still stands at 30.6% odds of 50 basis points, and this is up from Friday at 28.4, and a week ago this was 24%. It's been hovering between like 28 and 34% for the past week. So not really much change even after Fed Bostic spoke about calling for 25 basis points. Sell 402, buy 401. Let's see. Yeah, it should be. Yeah, sell 402, buy 401. That's expiring for March 7th. That is correct. The dollar's pulling back a little bit more. Might reach new daily lows. It's getting pretty close to her. 104.34 was the pre-market low at 2:30 in the morning. Let's see. And then it ended up bouncing at around 104.38. So if it does catch this, maybe we could go back to 50 on the RSI. But we're still pretty decent way away from 50 RSI. It's at 41 at the moment. To get to 50, I think it would need to be probably like 104, 47, 48, somewhere around there. right. Yeah, today might have been a good day for an iron condor. So that was my assumption, either bullish or neutral. Currently, we're at 405.80. We really haven't moved much since the open this morning. You got that 406 mark right above us, 408.46, and then top of the weekly range, 411.50. I'm almost tempted to open a call credit spread, assuming below 408, depending on how much we can get paid out of that. I already do have an iron condor, assuming below 406 today, which is right on the edge. But if we go higher with 408, 409, we get paid, let's see, 15 cents in credit. That's not actually too bad at all. To assume below 408, unless we have, another day like Friday where basically all day is a rally. Given that there's no economic data coming out today, that actually could be a possibility to see just an all-day rally, similar to what we saw Friday. Again, we didn't really have any economic data coming out after 10 a.m. and even after the economic data, the markets just kind of shook it off. So it is possible that we just get an all-day rally similar to Friday. Let's see, don't show the price, left extension on. There's 50 RSI. We're at 67 right now, so we're a long way from 50 RSI. But a pullback to 50 RSI would definitely be profitable for a call credit spread. We just really haven't moved much at all this morning. It's another boring day for the stock market. That's okay. Can still make money on boring days with iron condors and credit spreads, depending on which direction you choose. Let me update the earnings watch list for this week. So I got just 2 stocks on the earnings watch list for this week, actually. Couldn't find a third interesting one to trade. So let's go to my Notion page. Do we get rallies with no economic data because retail traders are in control or just trading pullbacks? It's mostly just technical analysis based. Whenever there's no data coming out, then I feel like TA just kind of takes a spotlight. So over 50 RSI is just bullish, under 50 RSI is bearish, and usually that trend just continues until you get some sort of data. We actually do have some data coming out at 10 a.m. I think today, if I remember correctly. Economic calendar. Actually, let's go to my Notion because I wrote it down here too. I need to post this video tonight. But today we're getting, whoops, that's the recap. The outlook, we're getting the factory orders at 10 a.m. So this is basically supply side economics. So our supply chains have been getting a lot worse ever since like last year, the U.S. supply chains at least. And this is expected to come in at negative 1.8% versus positive 1.8% prior. So a reading below 0 would mean that there's higher inflation to come, which means higher rates, which means that stocks will go lower. And then a reading above 0 would mean lower inflation, lower rates, and stocks would go higher, right? The expectations is negative 1.8%. If it comes in worse than negative 1.8%, then that would be really tough for our supply chains and lead to even more inflation. So a reading worse than this would definitely lead stocks lower. A reading better than this would lead stocks lower, but not as much. And then a positive reading, anything above 0, would probably lead stocks to be higher. That's my best guess for that 10 a.m. report. SPY actually did end up pulling back to 401.15, almost at 50 RSI. So if we do get a turnaround here under 50 RSI, that could set the sentiment for the rest of the day. Tilt this back up a little bit. But yeah, dollar did end up catching a little bit of a bounce. Still not at 50 RSI, so we can't call this bullish yet. But yeah, looking at the dollar, or looking at SPY, this one's definitely pulling back. And then a crack below 50 RSI would be bearish for the rest of the day. Or not for the rest of the day, but for whatever time frame the markets would like to be bearish on. With Powell speaking tomorrow, I think that the markets would be bullish though. Given, what he said at the last time that he spoke, I don't think that he's going to try to walk back any of the comments that he had made. I think that he's kind of stuck to his guns and probably going to call for 25 basis points, which would definitely lead the market to go up if he does. All right. AI stocks are doing really hot right now. This stock has generated 60 times more returns than SPY, Alphabet, and Microsoft. Well, I would hope so with Microsoft and Alphabet, considering how much they've dropped. Not too hard to beat them. But yeah, so far this daily candle very flat. A little bit of wick in either direction. We did end up closing the gap down. Let's see. Wait, when did we fill that gap down? Not really. I mean, we gapped up overnight, right? So this is all after hour trading. So we might end up having to close the gap below, which is 404.14. So we'll add that to the chart right quick, 404.14. If we do end up hitting that by the end of the day, I will try to close out of my call credit spreads that I got open. Those ought to be profitable. Are we bullish or bearish for today? I'm bullish to neutral for today. Doesn't Powell want to see the markets go down? It's hard to say that considering what he said at the last meeting and calling for disinflation. He definitely had a bullish tilt to the market the last time that he spoke. Whenever he said disinflation, I think it was like 10 or 15 times at the last meeting, the market rallied from like 410 to 418, like 2%. So I don't think that he wants to see the markets going down. He should want the markets to go down, considering that it leads to higher inflation whenever equity or stocks are going higher, especially high growth names and especially meme stocks and stuff like that. You would think that he would want stocks to go down, but considering what he said at the last meeting and how he kind of perpetuated the rally, I'm not sure if that's actually the case. Any important events for CPI, FOMC this week? Yeah, for this week, today we have factory orders in about 8 minutes. Powell is testifying to Congress on Tuesday and Wednesday, both at 10 a.m. You have ADP non-farm employment change at 8:15 in the morning. Expectations is 195 versus 106 at the prior reading. Higher reading means more wage inflation, higher rates, lower stocks. Lower reading means higher stocks. Then you have the JOLTS job openings at 10 a.m. on Wednesday. 10.6 million job openings versus 11.01 million at the last reading. More job openings, more wage inflation, higher rates, lower stocks. Lower reading, higher stocks. Then you have initial jobless claims, 195 expected versus 190 prior. That was just last week. So usually this one doesn't have as much effect just because it's on a weekly basis. It's not that volatile. Higher reading, though, means softer labor market, higher stocks. Lower reading, hot labor market, lower stocks. You have Fed Bar, one of the presidents, I believe, speaking at 10 a.m., and then you have non-farm payrolls at 8:30 on Friday, and then the unemployment rate at 8:30 on Friday. So you can read through this and whether that would be bullish or bearish for the market. So higher reading for non-farm payrolls would lead to lower stocks. Lower reading would lead to higher stocks. And then lower unemployment rate means lower stocks, and then higher unemployment rate means higher stocks, just because the Fed doesn't have to raise rates as much. Do I trade full-time? How much money do I need to be a full-time trader? Well, I made about $1,500 last month, and my total bills come out to like, I would say like $4,000 a month. I'd say $3,500. So for me, I would probably need like twice the amount of money to trade full-time. I do make money on the YouTube channel and then through the Discord, so that definitely makes up for it. And then I also live with my wife, who pays also part of the bills. So, you know, right now I think we're making a combined probably 6,000 or 7,000 with options trading, YouTube, and her job. So we're saving about 50% of our income. But yeah, if I wanted to just live off of trading, I would need to trade with like probably 20,000. 20 to 25,000. Just in options trading, that is. How do I decide credit versus debit? Any criteria? I mostly watch volatility, whether it's high or low. So you can look at the VIX. My rule of thumb for trading debit spreads or credit spreads is if the VIX is above 25, it's best to do debit spreads because there's more volatility that you can take advantage of. Whereas with credit spreads, if the VIX is below 25, I'd rather be in credit spreads just because the markets aren't expected to move as much, right? Whenever you have a credit spread, the more that the stock can move, the more that you can lose. So say I take on a 20-cent credit spread, that's $1 wide. I can lose up to $80 on that. So if volatility is extremely high, that could mean that my gains for credit spreads would be wiped out very quickly if, you know, SPY ends up rallying, I don't know, 1%, 1.5% in a day like it did on Friday, which was above expected volatility. But yeah, below 25, I would say credit spreads are best, and then above 25, debit spreads would be the way to go. But I also like to use debit spreads if I can find a decent opportunity, and if the expiration date is longer. So for example, what was it? Last month in February, I did a debit spread that I ended up nearly doubling my money for. So if we look at the February log, it was a put debit spread that I had opened around the middle of the month, if I remember correctly. Put debit spread, hopefully I can find it. This one right here. So this one had like a month until expiration. So if you are going to use a debit spread, I would say like 3 to 4 week expiration would be in your favor. So I opened it on 2/17. The expiration date wasn't until 3/24. So I bought these at 28 cents a piece, and I ended up closing them at, where did it go? 40 cents a piece, right? I had a chance to actually close them at like 45 cents a piece, but I got out a little bit late there. But what I did basically is I assumed that SPY would be below 395 on my expiration date of 3/24. Whenever I open this, SPY is trading at like 405. So if you have a long enough time frame and the markets actually do choose a direction, then you can make a decent amount of profit with a debit spread. But you have to have time on your side. But if you're doing like the 0 date expiration or anything really less than probably 3 days until expiration, I would do credit spreads with the VIX below 25. Take over CNBC with buy, would watch you daily. Let's see. But yeah, SPY trading at 405.50. Dollar still, actually the dollar is down. 104.38. So almost at a new daily low. We'll see how this supply chain report ends up shaking the market. We'll go to the economic calendar. And this is the factory orders. Again, if this is negative, that means our supply chains are getting worse, leading to higher inflation, lower stocks. How to add VIX in TradingView. Also how to avoid risk on assignment while playing spreads for SPY, QQ, and others. So if you want to avoid assignment, the best way to do it is just doing out of the money with each trade, right? So for credit spreads, you want to go above the stock with a call credit spread, below the stock with a put credit spread, and then for debit spreads, above the stock for a call debit spread, below the stock for a put debit spread. So as long as your options are expired, or as long as your options are out of the money, you have a lower chance of getting assigned early. And you don't want the options to get super deep in the money. The deeper in the money your options become, the more likely it is that you'll get assigned early. So the more in the money and the closer to expiration, the less extrinsic value will be in your option, and the more likely you are to be assigned. That's how early assignment generally works. But factory orders came in negative 1.6 versus negative 1.8 expected, so that is should be bearish for the markets. The dollar is popping a little bit higher. SPY not really changing much so far, 405.50 still. But if our supply chains are continuing to get worse, that is one of the big issues that is plaguing inflation, with our supply chains continuing to either deteriorate or stagnate, and the persisting higher demand in the market means that prices are going to continue to rise. And until our supply chains are able to recover here in the US to meet that, new excess demand, we're going to have higher inflation. So saw a little bit of a rise out of the dollar to start with. A little bit higher now, 104.42. So if this does end up making its way back up to 104.50, that could spark the markets to be bearish. If a credit spread ever goes against you, do you roll? Very rarely, I would say. Rolling for me is not common. I don't do it very often. But yeah, SPY is trading at 405.40. Down after the report from 405.75. So the initial reaction is down with the negative factory orders. If we don't get a big reaction out of this, I think we're just going to trade flat today. 406 is calling it pretty close, though. Yeah, the dollar index is pulling back again. Let's see what the 10-year made its way back up to 396, so that should push the dollar higher. The problem with the dollar, though, is, for exchange, we did have the European Central Bank calling for 50 basis points at their next meeting, which is next week. So if our Fed isn't able to keep up with that 50 basis points, that would devalue the dollar compared to the euro. So yeah, dollar index is pulling back even more to a new daily low, 104.34, and then conflicting that, you have the 10-year making its way back up to 3.954, basically where it closed on Friday. So pretty conflicting, but let's see if we can get out of this call credit spread since the dollar is going lower. All right, down by 75. Yeah, the dollar is still going to a new low, surprisingly. So probably just best to get out of this trade. Well, it's not at max loss. I opened 5 of these at 34. Looks like I have to close them at around 55 or so. Okay. Yeah, that dollar is just getting whacked. Got closed out of one of them. Still waiting on the other 4. Might have to raise my order. I think I'll just leave it though. God dang it, Robin Hood. Don't do this to me. All right, I think I got filled on the rest. 55. And then I'll keep that put credit spread that I had opened earlier. Closing options alert. Premium. Just cut losses on the SPY call credit spread expiring today. 3.6 at 55 each. Assuming below 406. And I had originally picked those up at 34. Let's see. Where is it at? I'll just take a screenshot of this. That'll be easier. Yeah, we're at 405.80 now. Originally opened 5 at 34. So 55 minus 34, 21 times 5, 105 for loss. And now SPY is above 406, so good thing I cut my losses there and not higher. Currently, these are going for 60 now. So now we wait on our put credit spreads, and I do have an iron condor too that might be in a bit of trouble. Let's see. Well, with Powell speaking tomorrow, I think this could pull back possibly, but I'm more bullish on Powell speaking than bearish. I think what could possibly turn the markets around though would be the employment data coming out on Wednesday and Friday. That's what I think would send the markets down. I think assuming that we'll be below 409 Wednesday with the JOLTS job report would be a decent trade to take on. Or maybe call it 410, just because we do have a couple days. We'll get more credit out of it. Let's see. So Wednesday is March 8th. If we're assuming below 410, we get paid a good $30 in credit for that. That's not too shabby at all. Quite like that. We might get a little bit more depending on how SPY rallies right now. What stocks am I buying for baby Eleanor? Buying Doge. Doge full port. $0.27. All right, so I'm getting 27 for a call credit spread. Actually, 28. Cool. Get a little extra credit. Shiba Inu. All right, I got those at 29 actually for call credit spreads, assuming below 410 on Wednesday. New options alert. Premium. This is another swing trade. Swing trades for me seem to be more profitable than day trades, so I might even focus on those a bit more. Just opened a new SPY call credit spread expiring Wednesday the 8th, 3-8, and I got them at 29. Oops, they're 29 each, if I can spell. Assuming below 410. What's a swing trade? Anything that lasts more than one day. Or I guess anything that's more than a 0 date expiration option. Looking for 50-cent credit for NVIDIA. Let's see, NVIDIA. Currently trading at 240. Oh my god. That stock is ridiculous, man. It don't stop. It don't stop ever. Let's see, 243 It's actually a decent mark. That's the last resistance that I got above it. Then you're looking at 252-ish to 58 would be your next resistance. I'd say below 255 would be a decent call credit spread opportunity. But, you know, the markets just keep pushing like they are right now. NVIDIA's just going to eat that up. And 255 would be a walk in the fucking park. So, you really gotta... You could always hedge your position too. So you could go short NVIDIA, long SPY or something like that. Hedging your positions is always to your advantage, just so you can take profits either at different points during the market, or at least you can reduce the amount of losses that you take if you guess the wrong direction. Like right now, I have a bullish trade for tomorrow, but then a bearish trade for Wednesday, right? So I have the put credit spread expiring tomorrow, call credit spread expiring Wednesday. So kind of balancing out the trade. The UVIXI calls that I sold are basically worthless at this point. I could take profits. What's the expiration date? The 10th? They're going for 1 each. I could roll this position. 30-day expiration. How much can I get? Oof. The credits suck. I sold these 850s for a lot. I think it was like 20 cents each. And now if I want to get 20 cents out of it, I can only sell the $6 strike price, which not a huge fan of. So I'm going to wait until we see a decent rally out of the VIX and then potentially roll. But the VIX is currently trading at 1871. So basically at the lows again. Jesus Christ, I can't believe the VIX is this low. I can, considering the volatility has been absolute shit. Like, you're not seeing more than usually like 0.75% in either direction each day for like the last 2 months. It's been very boring past couple of months, but yeah. And then you're just trading range bound too in that time frame. Ever since January, you got the rally initially, but then after about mid-January, it's just been flat, up and down a shit ton though. But yeah, SPY's trading at 406.50. My put credit spread is assuming that it'll be above 402. Dollar index is lower again, 104.25. Jesus, that's tough. We do got some supports at around 104, so that round number mark. That's the lowest that it went on this huge dip. So if we do get a bounce out of the dollar, I would think that it would come from that. But you got a clean rejection out of the 200 moving average on the hourly chart. So just based on that, I would be pretty bullish over the next couple of days in my best assumption. But again, that really depends on the data. If you get hot labor market data, that could easily just send the dollar skyrocketing again, like you saw between 223 and 224, when it went from 104.50 all the way up to 105 that day, 105.25. So we shall see what happens there with the labor market data on Wednesday. Makes a killing on his OnlyFans. ES did a breakout and retest of 40.60. Look at the hourly for prior support. I did take a bullish stance with the put credit spread expiring tomorrow. That would basically be assuming, I think, above like 40.25 for ES and then 402 for SPY. But yeah, definitely heated on the 1 hour chart. 75 RSI. 4100 could be inbound over the next couple of days. I've got supports at 40.35. Let's see if I still have the... No, I don't. I don't know why I have open interest. That's not really relevant here. $21.74 to 48.08.25. So if we want to look at Fibonacci's, the next one up is pretty far out, but let's see, 48.08.25. Next fib level is at 48.16.57, which is pivoted off of 1, 2, 3 times, 4 or 5 times ever since. So definitely be watching out for that Fibonacci level, but you know, considering that it's about 110 points off, I would doubt that we would get there by the end of this week. Maybe over the next 2-3 weeks, I could see us getting to that level again. All right, those put credit spreads are doing me pretty well. And the call credit spreads working against me. Those that opened at 29, now they're going for 32, so I could have got a little bit more credit out of it. And then the put credit spreads open at 23, now they're going for 18. I opened just 4 of them, so $16 profit so far for this. And I think if we close above 407, then we probably don't even have to worry about this trade tomorrow, unless Powell says something completely out of pocket. But we'll wait and see what he's got to say. Might open a put debit spread tomorrow in the afternoon with the JOLTS job openings coming out on Wednesday. I think that would be a good one to wait on, probably. And I think, based on where we're trading right now, that could be able to send us below 405, maybe 404. But it really depends on where we're trading tomorrow in the afternoon. If we continue this rally, we would be at like 410, 411 by tomorrow afternoon. But we'll see if that continues to rally the way that it is right now. Let's see, we got durable X defense down 5.1%, versus down 5.1% prior. Factory orders again down 1.6. We talked about that earlier. So basically all of the data this morning was bad, but nobody was really paying attention to it just because these aren't like really big popular releases like CPI or JOLTS job openings, things like that. So you're not going to see much reaction to it. Do we need to close the daily alerts? Yes. Close. I usually close before 2:30. A little bit of a pullback here, but nothing major. 406.50 right now. Dollar index finally caught some bounce, but not really much compared to the drop that I saw. Oh no. We lost one of our fundamentals. I don't know which one it was. IWM. IWM is still down 0.25% today. Shockingly. That could be a better upside opportunity than what you'll get out of SPY or QQQ. That's something that I would take a debit spread on. Assuming maybe like over 190, 192 will be pretty tough. But given that it's tougher, that could be a decent opportunity to the upside. Call debit spread for IWM would give you a lot better risk reward than what you'll get out of SPY as of right now. Let's see. I know if we go above 191, that would be pretty easy for today. You pay, let's see, for call debit spread expiring today on IWM, you pay 75 to make 25, so that not really worth the risk reward. But if you go 192, the one that's expiring today is actually kind of expensive at 43 cents each. If you go with tomorrow's expiration date, it's probably going to make it worse. So maybe that's not as good of an opportunity as I thought. Yeah, it's 50 cents for expiring tomorrow to assume that it would be above 192. So 1-to-1 risk reward ratio for that, not worth it in my opinion. What do I think about Zoom? Holding long term. Zoom, let's see. I think that their services really aren't going to go away. I think that there's still plenty of people working from home, or people like me that do like online coaching and stuff like that, and I think that's probably just going to get more popular, not just in my niche but outside of my niche. Let's see, it's trading at 72 versus a low of 63, so it's not too far off of its 52-week low. Their last quarter was really profitable at 122 earnings per share, which I thought was really good. It was way above at Wall Street expectations, expecting negative 4-cent earnings per share, but I don't know how much of this was GAAP versus non-GAAP. You want to look at that to see what the earnings quality is. So if you look at Zoom earnings, this is probably just going to show us the non-GAAP numbers, I'm guessing. Yeah. Zoom investor relations. Okay, I'll go to the quarterly results. All right, fourth quarter total revenue, $1.1 billion. up 4% year over year. Let's see. Loss from operations. So GAAP. So this is what I was talking about. GAAP loss from operations for the fourth quarter was $130 million compared to GAAP income from operations $251 million in the fourth quarter of 2022. So the business is losing the money, which is not exactly what you want to see. Net cash flow provided by operating activities was $211 million for the fourth quarter compared to $209 for the fourth quarter. Let's look if we can find their cash flow statement. This is the main thing that I like to look at whenever I'm going into a long-term opportunity is statement of cash flows. Their net loss was $104 million, so that's just the business. Last year, they made $490 million from the business. And then if you look at their operating activities, this is $211 million versus $209 previously, but a lot of this came from stock-based compensation. So that's not really sustainable. Unless you dilute shareholders. And then you have prepaid expenses coming in second biggest. Not really much compared to the $500 million that they made from stock-based comp. So, considering a lot of their cash flow came from stock-based compensation, I'd say that's not the greatest long-term opportunity. And then if you look at their cash balance, they still have $1.1 billion at the end of the year. Compared to at the beginning of the year, they basically started with the same cash balance. So they haven't lost much money. They are losing about $100 million a year from the business itself. So they still have like 10 years of runway. So from a cash flow statement perspective, I would say this is a good opportunity if you believe their business to be growing. Next, you would look at the statement of operations, see if their business is growing. It is, but at a very slow pace. Like revenue only went up 6%. And then let's see, income from operations actually dropped year over year. They could always, turn the business around, cut their expenses. Their operating expenses nearly doubled from $560 to $950. So if they cut their operating expenses, that would help them become a profitable company. But right now, it seems like they're spending a lot more. So I would want to wait until they start to cut spending, and then I would say that's a better long-term opportunity. But, if you do expect them to cut spending later on, say laying off employees or whatever they need to do to cut their expenses, yeah, that would be a good long-term. Looks like the dollar finally caught some support at 104.25. Yeah, 104.32 now. But SPY is still hanging in at 406.85, so almost 407. It's not really reacting much to the dollar climbing at the moment. But yeah, I think that's all the trades that I'll make for today. SPY's at 407. We could take the profits for the put credit spread, but I think if it's above 407 by the end of the day, we don't have to worry about cutting the position. But right now, it is going for $20 a profit, 18 cents a piece when I opened them at 23. I think I'm just going to let it ride. As long as we're above 50 RSI, probably going to continue to be bullish for SPY, unless you get a turnaround for the dollar sometime later today, which is currently at, well, that's not the dollar, that's TLT, 42 RSI. So if this does manage its way back up to 50 on the RSI, you might start to see a turnaround for the dollar and then a pullback for SPY. But until then, I will catch y'all tomorrow at 9:30, and hopefully we can hop in a bearish trade for the JOLTS job openings tomorrow. See y'all then.